Daniela Cambone, and welcome back to the summer series here at StansberryInvestor.com. Today, we are talking about a world-leading hydrogen economy, which can create thousands of jobs and billions of investment money flowing in. Which commodities are set to benefit from this? Joining me now is Will Rhind. He's the CEO of GraniteShares ETFs. Will, welcome back. Good to see you.
Thank you. Great to be back. Thank you for having me on again.
So let's talk about this hydrogen economy boom. We've seen the UK really leading the way. The country has just revealed its strategy to kickstart a low carbon hydrogen sector as part of Prime Minister Boris Johnson's 10-point plan for a green industrial revolution. China also involved and looking to push forward this initiative. Who stands to benefit here in terms of the metals?
Yeah, I think from the metals perspective, probably the one that I would highlight is platinum. And the reason for platinum is because it serves really a dual purpose or a dual role in the hydrogen economy. So on the one hand, if you're looking to produce green hydrogen, which is what all the excitement is, and that's hydrogen that's coming from renewable energy sources, then you need platinum for that particular process. And then obviously on the other hand, if you're looking at just hydrogen fuel cells themselves, the fuel cells need platinum as well for the production of electricity. So it's really a dual purpose in that for the purpose of the production of green hydrogen, you need platinum, and then also the fuel cells themselves, you need platinum. So I think really that's the metal that's key in this.
Let me ask you, Will, because when we've spoken catalytic converters in the past and the role that platinum and palladium play in the creation of these, they're interchangeable. And now, how about for the hydrogen economy? Can platinum not be replaced by palladium?
No, not in the catalyst that we have at the moment. And that's not to say, obviously, that there might be another technology down the line that might be better. But at the moment, it's really platinum that performs that role and performs that role best. And so that's why there's so much interest in platinum at this stage.
Now, in terms of the PGM space, it's interesting that platinum, in terms of price performance, as we speak at least, is behind palladium and way behind rhodium. Had we had this conversation 10 years ago, it would have looked a lot differently with platinum prices at the top. So right now they're lagging in the PGM space. How do you expect this space to change or play out over the next 5 to 10 years?
Yeah, I mean, I think that's, really, if we're talking about hydrogen, it's that the production of, hydrogen from green sources at the moment, that's a very small percentage, less than 1% of the total amount of hydrogen produced. And so when we're talking about the production of green hydrogen, we're talking about something that is going to be, I think, a big thing in the future. But it's something that is starting to happen now. And as you mentioned briefly, national governments have got behind this, putting in money, not in addition to corporations as well. This is something that we'll see going forward. And I think from that perspective, we'll see more demand for platinum. But that sort of explains where we are at the moment. I think the main reason why we're seeing platinum prices, the lag, if you will, compared to palladium, compared to rhodium, is really that we haven't seen that sort of substitution effect from the auto industry yet that we've been talking about for some while. That is, to your point earlier, that is substituting palladium for platinum in catalytic converters. And so that demand really needs to happen short term, I think, for the price to move up.
Platinum, what kind of forecast do you see for the metal 6 months to a year from now?
Yeah, I think in terms of the price at the moment, it's tricky, right? Because on the one hand, I think that platinum, we should be talking about platinum in the same context as other metals like lithium, which have been fantastic growth stories. They are future metals. But that is the word, it's future, it's not present. And right now, platinum's been driven by fundamentals today. And those are clearly impacting the price more so than any kind of talk of future state. So I think in terms of platinum, we need the fundamentals to return to something more positive. I think demand picking up, particularly from the auto sector, that is still the biggest driver. more demand for jewelry and more demand for investment.
Okay, but what kind of prices do you foresee? Do that said, if the fundamentals look so great, do you see it overtaking gold once again?
Yeah, no, just to be clear, I don't think the fundamentals are that great right now. And that's obviously why we're seeing that reaction in the price. However, that's not to say that, we can't see, or we wouldn't be able to see a platinum price higher than we are today. So let's say, platinum price getting back up towards, $1,200 an ounce, something like that in the next 6 months. That's entirely possible. But for getting way up, to the sort of Palladium style prices that we've seen, i.e. $2,000, and indeed back to the all-time high for platinum, we're going to need to see significant uptick in demand.
Gotcha. Okay, let's talk gold prices now. We're speaking ahead of the Jackson Hole Symposium, the big Fed meetup. I'd love to get your thoughts on what you think the outcome from that meeting can be and what it could mean for gold prices.
Yeah, well, I think, the key question when it comes to the Fed and comes to, policy at the moment is really there's two things. There's, on the one hand, we've got inflation, and that's been, a huge subject on everybody's lips in regards to, policy as it pertains to tapering, as it pertains to possible interest rate rises. The other side of that, of course, is just what's going on in the economy. And I think, from the retail sales numbers that we had out earlier today, weren't as strong as people thought. I think that some of the more aggressive, perhaps commentators thinking that the Fed might start tapering earlier than perhaps expected. To me, I don't really see anything new coming out of this meeting. I think, again, still with the retail sale numbers, with the bond market the way that it is, our yields coming down, with growth slowing, GDP growth that is, I think that we'll probably end up with things same as they were for this particular meeting.
So I guess just final thoughts, Will, if I had to ask you to choose amongst the metal space here, which is the star for you or the one to watch? Is it platinum? Is that your top pick?
I think in terms of undervalued or valued, depending on which way you look at it, to me, platinum is really the one that stands out in terms of, why is the price so low, versus the other metals. We tried to give some good context around that, that case and why that may be so. But I think going forward, if you had to look at one metal that had, the opportunity to, to increase in price, outperform the others, I think platinum would be it. But again, short term, people are really worried about inflation. I think that's why gold is getting the attention at the moment.
Right. Well, how about so more explosive or more room to grow than silver?
Yeah, I think so, and only because it's coming off a lower level. So typically, silver, as you know, sort of trades more in lockstep with gold, and so right. It's typically a metal that has a higher volatility than gold, but for silver prices to increase, typically need gold prices to increase first. So in that environment, silver prices will most likely outperform the gold price. But I just think that where they are, they're more in line with gold than, say, platinum, which is much more depressed level.
A last question for you, Will. In terms of exposure to platinum, are you better off buying the miners or physical platinum? I'm not putting ETFs in there.
It depends on what your objective is. And I know that's potentially a cop-out in terms of answering the question. But the way I see it is they do two different things. So if you want exposure to the platinum price, there's no substitute than just buying the platinum itself. If you want exposure to a particular company or the sector more broadly, then you have to buy the mining companies, the stock. But they are very different. So some people do make the mistake of buying mining company stock, thinking that it would track the price of platinum. It doesn't do that. There are a number of reasons for that. But I think to keep it simple, if you want to invest in the metal, if you think the price is going up, buy the metal.
That's a really good point you made there, Will. The same does not apply for gold, however, right? or would you apply the same mentality?
The same. I would apply it to any commodity. That typically you get people that think, take oil. Let's stay outside the precious metal space for a second. And people think, hey, the price of oil is going to go up. How do I get exposure to that? Well, I'll buy an oil company. And perhaps the first reaction is, that's logical. However, there are obviously multiple different types of oil companies. There are those that produce oil, there's a service, and then even the big producers, typically they have a diversified book of business where it's not just production of oil that they do. And then there's obviously management, there's all sorts of other concerns that go into it that ultimately means that, yes, all things being equal, the price of oil is increasing, the company should, or the company's share price should rise with that, but it doesn't mean it'll rise one for one.
Gotcha. Very good thoughts. Will Rhind, thank you so much. Come back soon to StansberryInvestor.com, okay?
Thank you. Good to see you. Thank you for having me again.
Good to see you as well. Thank you, Will. Thanks for watching.